Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video we're going to talk about 3 different ETFs. I do own some ETFs in this portfolio. We talk about ETFs here and there. On my channel I've got entire playlist of all the ETFs that are Shariah compliant that I'm aware of that are out there. Now we need to kind of go over some of these ETFs and update them as regularly as we possibly can, because they can easily change. Because remember, some of these ETFs do actually quarterly balance, rebalance, and so on. So first of all, you might be asking, what is an ETF? ETF basically stands for exchange traded funds, and is very similar to like normal stocks. The only major difference is the fact that you can actually buy a basket of stocks rather than just buying one individual stock. And I will talk about some of the benefits of having an ETFs and some of the negatives. That's the first thing we're going to talk about. I'm going to talk about the positives. I'm going to talk about the 3 ETFs first. Then I'm going to show you something very important, which is called the expense ratio, which is basically how much it will cost you to actually own these ETFs in the long run. And you will be surprised. I'm going to show you a calculator that basically calculates the expense ratio for some of the ETFs that we're going to talk about in today's video. So first of all, like I said, ETFs can consist of, for example, hundreds of different individual stocks. Those Sharia compliant ones that are basically is already been filtered through, these basically ulama or these scholars have actually looked at them and basically signed some sort of a paperwork to say these are a basket of companies that are Sharia compliant. And remember, they treat it as a one individual stock rather than just individual, basically treating individual stocks completely different. So they apply the 5% for the business side of things. The interest bearing debt and interest bearing security is still the 30%, 33%, whatever you want to call it. So first of all, these ETFs are very well diversified. What I mean by that is you've got, like I said, hundreds of different basically individual stocks. They can be low costs in comparison to mutual funds. So mutual funds basically is what people used to do back in the days if they were looking for something passive, which means basically someone manages it and they have to pay fees for their management. So the fees were very expensive. So once ETFs came out, then people realized, this is a passive way of investing without having to pay all that basically extra money. So again, it's a very passive, so you don't have to do much. You buy every month, weekly, yearly, and maybe in the beginning of the year you just buy, I don't know, £20,000 worth of ETFs and you leave it alone, lump sum, or your dollar cost average. So that's again another advantage. So if you are new to investing, you've never invested in the stock market, you're looking for some sort of a Sharia compliant basically ETFs, then this probably is the right video for you. And if you already started, let's actually look at some of the expense ratios basically we will end up paying, because I do own some of those ETFs and I will share with you guys at the end of the video. So yeah, but before we get to all of that, I would absolutely appreciate if you can join us in the Patreon account, where you get access to a lot of things, including the Discord, and also that you get access to the family portfolio, all the buys and sells and extra things that I regularly add into the Patreon account. So let's have a look at the S&P 500 before we actually even look at all of this. So a year to date, the S&P 500 is actually up 27%, almost 28% right now. The Dow Jones about 15%, the Nasdaq's about 36%, and the FTSE 100 basically is about 5%. So which is not great. Now, one of the things that's going to happen in the next few weeks is basically a lot of hedge fund managers will start rebalancing their portfolios, because it's a new year. They're going to get basically, they will take some profit off the table. Sometimes what they'll do is they write off some basically losses that they've made. So they're going to sell all the losers and buy new companies. Basically a lot is going to happen. Okay, and these trading platforms that we basically these people use to actually do the trading these days. Remember, a lot of the trading that takes place on a daily basis is actually not human, it's actually machines, and those machines are doing all the trading based on a specific criteria that they was given. Okay, so these AI trained machines, whatever, are doing a lot of the trading. So a lot of these things are going to happen. So January will probably be a very volatile, and we will talk about that maybe in another video, but I just want to mention that you will see a lot of volatility in the stock market basically for the first 2 weeks of January, because that's exactly what has happened for the last 4 years. When you look at it, January, the first day of trading and the first week of trading, the stock market was down quite a lot, and that's when a lot of these people are selling all the garbage, or basically they're taking some profits off the table and then buying all the companies that they think will do better under the new government in the United States, or new, for example, there might be energy stocks might do better next year, or the sector rotation. All of these things that do happen around this time. So nothing to worry about. I would promise you, I'll just leave the noise alone and focus on what you need to do. So that's just a bit of information that I've noticed over the last whatever years, and it happens every single year. People panic and sell stuff, and by the time we get to March, April, people have already forgotten about it. So I'm going to share with you guys now the 3 ETFs that we're going to talk about. So the first ETF is the ISUS. So this is the US based companies only. Okay, so there's a world one, there's an emergency one. Basically it's owned by iShares. iShares is owned by BlackRock, which is the world's biggest investment basically firm in the world basically right now. So the expense ratio, so currently trading basically £59. Okay, so this is in pounds and in pence, sorry, and then total expense ratio is 0.3. So this is what you would be paying, and I will show you how much it will cost you over a period of time. Okay, and that's the surprising part that I'm going to show you at the end of the video. So year to date is up about 11.357. It has a yield right now, so that means we've already seen the S&P 500 basically is actually 10% lower, no, 16% lower than the S&P 500. It's more or less about 3%, 4% lower than the Dow Jones Industrial, but it has outperformed the FTSE 100. The Nasdaq is, of course, the outlier completely here. So as you can see here, we are underperforming the S&P 500. So you might be thinking, why am I buying this if it's underperforming the S&P 500? Well, there's not that many out there. So, there are other ETFs that have done better, and I will show you exactly what these ETFs are. But there's a handful of ETFs that we can invest in. So right now we can basically we take what we can get right now. Basically, distribution side of things or dividend side of things, you got 0.88%, which is decent, because a lot of these ETFs don't actually pay any dividends. And distribution is basically semi-annual. So I think they pay May in November. So the 2 times that they pay is basically May and November. Currently, they have asset under management of 194 million. Okay, rebalance is that basically that's how much money is basically that we invested as investors. Rebalancing frequency is quarterly, so every quarter they rebalance it, meaning that they will look at some of the individual stocks that they own, which I'm going to show you in a second, and then basically they rebalance it. So they might change it, the order of the percentages and all of these things. And they have 10 different sectors. Remember, the S&P 500 has 11 different sectors. So it is important. It's very diversified when it comes to that. But remember, it's only the US companies mainly. So it's not diversified in terms of the world side of things, but it's diversified by sector. So right now you can buy it through ISA. Okay, I do own this one, and the number of holdings is 127. So it's not a lot. Normal ETFs you're looking at in the thousands. Now let's have a look at the top holdings here. 57% is basically the top 10, which is absolutely crazy. And guess what? 36% comes from Microsoft and Tesla. This is the issue I have with these ETFs. Okay, some of them have a very high concentration on the top 2-3 companies, which is absolutely ridiculous. So initially I thought this is happening because they haven't rebalanced it, but it looks like they've done some rebalancing recently, but that's still 26%. Or maybe they're not willing to sell. They basically, sometimes, you know what they say, don't sell your winners, and basically don't sell your winners and keep your losers kind of thing. So Anyway, so you got 26% for Microsoft, Tesla, you've got ExxonMobil, you've got Procter & Gamble, J&J, Salesforce, Chevron, Cisco, ServiceNow. ServiceNow, I think, is one of the newish ones that they've added to the top 10, and basically Linde as well is on there. So the rest of them, I'm okay with this. This is what I expect from ETFs, about 4 or 5%, maximum 10%, but not 26%. So that is the first ETF that we wanted to look at. We've already seen how it basically performed. Now let's have a look at the second one. The second one is also another one that I own. The two ETFs that I own is the ones that I'm going to start with. By the way, I'm going to do this for the next few days. I'm going to do all the ETFs that are there Shariah compliant. So if I have ever missed some of the ETFs you guys own, whatever, put it on the basically description and section, comment section, sorry, and I will basically look at them as well. Okay, so the more that we have, the better, inshallah, that we can share with the community. So the Invesco Dow Jones Islamic is the next one. It's currently trading $29 per share. Expense ratio is 0.4, so it's slightly higher than the other one that we've seen, but it has outperformed. Year to date, we're looking about almost to 21%. Remember the S&P 500, we said 27%. So this one has actually outperformed the Dow Jones, okay, and the FTSE 100, but it's very close, and you will see the reason why in a second when I show you the companies that are in there. They do pay dividends, but they're accumulating. That means they will reinvest that dividend for you. You don't have to do anything, and of course there's no different dividends frequency and so on. Currently they have 898 millions in terms of million US dollars in terms of asset under management. They rebalance also quarterly, and there's also 10 sectors. You can buy it through ISA, and the number of holdings is 1,579. So what I did was I downloaded the actual spreadsheet from their website, and I actually just used a formula to figure out how many numbers, because I couldn't figure out where that information was in their website. So this could be slightly wrong, because sometimes when you download the spreadsheets, it includes like different currencies, money, cash, or whatever. So there might be 5 or 10 different numbers, but give or take it, that's the correct number. Now let's have a look at the expense ratio. Check this out. So it's slightly more, but it has outperformed, and of course the dividends are kind of basically reinvested for you. These are the companies that are in there. So this is slightly better when it comes to the weighting side of things. So 8%, 7%, 7%, and then the rest of them 4, 3, again 2%, 1%. I really like that. I prefer this any day, and that's 40%. Remember the other one, we were looking about 57%. Okay, out of 127 stocks, basically the top 10 is over 50%, which is ridiculous. And this one, of course, the 40%. The rest of the 60% is basically whatever the companies that's left, which is absolutely amazing. And the companies include Apple, Nvidia, Microsoft, Amazon, Meta, Tesla, Alphabet. Now you might be thinking, how is this Shariah compliant? Remember, they will take this entire 1,579, okay, and apply the Shariah compliant standards that they're looking for, the 5%, the 33%. So they're not looking at individual stocks. Please understand that part. So I prefer this. And this is one of the reasons why when you look at, and I'll show you this in a second, okay, when you look at here, what you will see is 70% is basically is this one, and 30% this one, because I know this will outperform this here. So I want to see, basically, I want to have that bit more on the one that's going to outperform or perform similarly to the S&P 500. So that's one of the reasons. So although I haven't added a lot of money, there's only £1,000 here. Inshallah, I'm planning to add more, and I'll talk about that in a bit. Okay, right. So going back here, you can see the 40%. Now, these are the two Shariah compliant ETFs that I wanted to share with you guys. Now, I've got one more that is not classified as a Shariah compliant in basically right now. So if you go to websites, for example, Musafa or whatever, actually Musafa is slightly changing. Let me actually share this with you guys. So this is Musafa. It used to have, okay, this covered, but they've changed that now, and I've noticed a couple of ETFs, they've done the same thing. Okay, so I'm not sure what is happening here. However, it's not Shariah compliant itself, but the companies in there are majority of them are Sharia compliant. So you can check it, Zoya, you can check it in the, by the way, the one I was looking at is the US version of it, because I don't think they have the UK version of this one. So as you can see here, it's currently trading at $33 per share. And the reason why it's Sharia compliant is all the companies in there, all 25 of them are in the semiconductors, basically. All of them are semiconductors, and all of them apart from one, I think, are not Sharia compliant. Now, this is a bit of a dangerous one, and I know a lot of the brothers on the base of Discord actually do invest in this one. My concern for this one is the fact that yes, it's doing absolutely amazing and so on, but anything can happen. It can easily change, and of course you have to keep up with it. If you put in the the time and the effort, alhamdulillah, then you have nothing to worry about. You just keep checking, okay, and hopefully these guys will start covering it again, because it really does help, okay, because they do have basically some ETFs that they cover, but they don't cover this one anymore, so which is a bit weird. But generally, if you put in the time and effort, then you will be fine, inshallah. But the expense ratio is 0.35, which is not bad at all, percent, by the way, that is. Currently, basically, year to date, it has returned 31.72. So it actually outperformed the S&P 500, which is absolutely amazing. And the reason is because it includes companies like Broadcom, for example, Nvidia, who's done well this year. Qualcomm has done decent. And that's it. And then also this one as well. I think the top three have done absolutely amazing job this year. But the rest of them kind of underperformed to the S&P 500, if I'm correct. 76% comes from basically the top 10 companies, which is very interesting as well. Now, the dividends is basically accumulated. Again, similar thing, $1.94 billion, basically pounds. That is, by the way, it's not even dollars. This is in pounds. Although this is trading in dollars, I think this was in pounds or dollars, whichever it was, okay. And rebalance frequency is basically right semi-annual, so basically twice a year. That's what they will be doing. And the sectors is only semiconductors. So the issue is you're putting a lot more emphasis on these companies here. If something happens to the semiconductors, they all go down a lot, then of course you're going to lose a lot of money. That's the dangers we're buying is sector ETFs. So you can buy through ISA, and number of holdings is about only 25. So out of the basically we've got about another 15 missing from this list basically. So two things you need to worry about. One is to make sure that you understand the risk of this going basically becoming not Sharia compliant very quickly, and also the fact that you invest in a lot more into one sector, okay. So but in the long run, you might outperform the S&P 500. So now we've seen the three ETFs. I'm going to share with you guys now what would happen, okay, if we will start with this one. If you were paying this, okay, what will happen? So say I invest what am I doing? 1,000 basically pounds or dollars I'm going to start with, okay. So that's my initial investment, and annually I'm going to invest basically, let's say I'm investing 500 pounds a month. However, so that's about 6,000. So 6,000 a year. So we invest in, this is what we're starting with, okay. We invest in 6,000 every single year. Annually, the annual expected return, let's go with the lowest. So the S&P 500 will return 7 to 10%. Let's just say 7%, okay. The expense ratio was 0.3, okay, and say we're doing this for the next 15 years. Now let's go with 20 years, okay, and let's see what happens. This is our investment after 20 years, and this is how much you would have paid. Total cost of fund, $8,120, but you would have made $241,721 or pounds, whichever. So it is amazing that it's done a great job for you. However, this is expensive. That is really expensive. I will show you the difference, okay. So VU is basically one of those Vanguard, basically S&P 500, okay. This is the expense ratio, 0.03. Let's use that. Let's just use that as an example here, because it's really important that we understand how much we're paying. We're paying 8,120. you're paying 825 over 20-year period. That's the difference. That's the difference between what we pay and what basically will be what these people are paying. Now let's just say, for example, let's use the other one. Okay, let's see how much we're paying. 10,000. What about the other one? So let's, about 8,000. Let's go with this one here. So about 10,000, and the other one was 30.35, right? About 9,000. So this is one of the reasons why a lot of people are saying buying these ETFs right now makes no sense. However, the first one here used to have 0.5, so they have reduced it. So inshallah, the more we get these type of ETFs in the market that are really good, solid businesses, whatever, okay, hopefully the cheaper the expense ratios will get, and that's very important to us. So I hope you understand this. I hope it's a passive way of doing basically investments. Is easy. You just buy and hold. You don't have to worry about anything. Dollar cost average every single month, whether the markets are up or down, you just buy the same amount and then leave it. The risk is, of course, you have to worry about the companies that you're investing in, as well as, of course, the sectors on top of that. But the most important thing is the expense ratio, because this will eat into your profits. Can you imagine if you added that extra 9,000? So imagine that 20,000 you started with, right? So imagine we were doing this, okay? Imagine we were doing this, okay? Or if this has come down to, say, this. Can you imagine? Like, it would be so much easier, so much cheaper. I'd rather pay this. I'm happy to pay this and reinvest that rest of the, I don't know, $10,000 into this and so on. But right now, of course, this is what we have. We don't have that many basically ETFs out there until inshallah this becomes very popular. We're just going to carry on inshallah investing in the ETFs that are available to us. And of course, if you are new to the market, always make sure that you start with investing in ETFs. Again, I'm not a financial advisor, but I'm just saying it's easier to get into ETFs first and then learn how to start investing in individual stocks, because this carries a lot more risk. I promise you. Look at all this is green. You look at basically this. Okay, there's loads of reds around on my portfolios generally. Anyway, I'm going to stop the video here. I've got a lot more ETFs coming up inshallah. Put it on the comment section inshallah if you have any ETFs that you want to share with me, and then I will do a video inshallah. Have a wonderful day. Assalamu Alaikum.